Hey guys, welcome back. Drip Coach here with Drip and Farm for property where we don't trust, we verify and operate with integrity and transparency. So today is my update on the portfolios that I created way back in December after that first rally. I was doing these weekly updates. I think now it's like, I don't know, once a month almost. But remember the TLDR from Raoul Pal, the don't fuck this up thesis that you see up here, was put the bulk of your capital, not financial advice, of course, if you're going to invest into the top performing assets that are going to be here for a while. And for him, that was Bitcoin, ETH, and Solana. So like it's those top three, and you can figure out how you want to allocate that 80%. It could be all 80% into Bitcoin. It could be 30% Bitcoin, 20% Solana, 20% ETH, whatever. The thesis is that those will be here. Like Bitcoin has proven itself to be the long-term store of value. ETH is shaping up to be that financial layer that Wall Street, and as Raoul Pal says, that it'll be the Microsoft basically platform. So like you go back into looking into businesses and corporations, most of them back in the .com era were using a Microsoft operating system, aka Windows servers, all that stuff, not Linux, not Apple, none of those other platforms. So that's what he thinks. And seeing some of the writing on the wall recently in some interviews, it does seem as though Wall Street is definitely moving towards that. So it does make ETH a safe bet. I'm not an ETH maxi. I don't have any ETH, and I have a little bit of Solana. So in this particular portfolio, we did 50% Bitcoin and 30% Solana. And then we did 10% into Sui, 5% into Doge, 5% into Smoke Chickenfish. And this was a $100 weekly dollar cost average investment. And you can see here that the average buy from dollar cost averaging puts the price at $100,000. So that just goes to show you that DCA is the way to go, especially if, I would say not just especially, only if it's a sound asset that you're investing in. You can DCA into a shit token and you can get wrecked. So I did that with Drip. So this shows you that it is outperforming the current price of Bitcoin, meaning by dollar cost averaging, I was able to catch those dips in the 70 and the 80 range, which puts Bitcoin total price purchased just under 100K, even though the bulk of the year Bitcoin has been above 100K. But because the dollar cost average works out so well, you catch those dips because you're just buying once a week. And same thing for Solana. The average price $168, Sui $3.24. And the current price is $3.30. So all of those are up. Doge, it's pretty much been chopping around this 22-cent range. So a slight dip on average for that one. And of course, a meme token, completely meme token, Smoking Chickenfish. This is exactly what I just mentioned. If you are dollar cost averaging into a shit token, you will still get wrecked. So this has been the absolute worst performing asset in the entire thing, which is why you only allocate a small portion of your bag. So when we look at the overall, right now, this portfolio is at a all-time profit of 12%, but BTC is at 23%. So on average, BTC has done twice as well as this because we haven't quite ripped into that altcoin season market in regards to seeing the altcoin season dominance flip and the fear and greed index really get into these greed category. It's something I wanted to bring up real quick in here, which is very fascinating how quickly we forget. So right now we're sitting just above the quote unquote fearful level of 40. So we're in a neutral category right now. But we were at 40 or 39 September 1st. So that's 2 days ago as of this video. Let's look at the last time we were at 39. 39 literally earlier this year, 38 here. Bitcoin was at 96K. So a 109 price is the same level of fear as a 96K price. And then we go back, let's go here, 30, we have a 39, we have a 40 there. That's 57K in July of last year. People were fearful. So it's just fascinating to see how quickly we forget. So the same level of fear when you zoom out is putting Bitcoin at much, much higher prices. And if you go into September 2023, you get 30, do we have 39 in here that I can look at? 38 puts Bitcoin at a 26K price. Just 2 years ago, literally 2 years and 1 week ago, Bitcoin was 4 times cheaper. So as they say, when in doubt, zoom out and just focus on Bitcoin, man. You will be fine. I don't know if we're going to get, a huge multiple X's in it, but definitely feels like we're still going to definitely hit that $1 million per coin mark, probably by 2030. So if you stay humble and stack sats, you will be fine. But if you stack shit tokens, you will get wrecked. Most likely, unless you get super lucky. That's literally like gambling on roulette, putting all your money on one number. Actually, it's probably worse odds than roulette. All right, so let's go into look at the virtual bacon portfolio, the one that I did buy a bunch of alts, typically in the top 100 and a few pushed out to the top 200. But this was 2-time purchases. So one time 1,500, another time 1,500. And this has just been wrecked against Bitcoin because, again, we have not seen an altcoin rally yet. We've seen some alts rally, so I want to take that back. My OKB went up, BNB went up, my Cardano is up. So depending again on which shit token you get, you could be up, you could get wrecked, which is again why Raoul Pal thesis, don't fuck this up, is so important. 80% of your tokens into the strong performing assets, because rule number 1, don't lose your tokens, don't lose your capital. So they say never risk more than you can afford to lose. It should be never risk anything you're willing to lose. If you are smart about it, you're going to invest savvy wise into assets that you can hold long term that have an asymmetrical risk reward ratio, meaning you're quite certain over a long enough time horizon you will win, not lose. So don't put all your eggs in one basket of shit tokens. All right, so that's the update on these. I think by the 4th quarter, we should see this rally. I think September might still be kind of choppy for Bitcoin, but as Bitcoin dominance drops, then we do see altcoins start to perform better. So I don't know if the altcoins I pick will perform, but we'll see. And that's also where I want to start looking at how exactly do you take profits as well. So the best way to me is to dollar cost out the same way you dollar cost average in. So that just requires you picking some price targets of where you think a token will be, maybe a 2 or 3x. And then you start taking profits all the way up to whatever that level is. And then of course, a small bag, they call it a moon bag, to hold, in case it goes higher. But you don't want to round trip your tokens at all, except for Bitcoin. That's the only one I plan on round tripping. Everything else, you sell out and then buy more Bitcoin with, in my humble opinion. All right, that's all I got for this. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.